expect to happen, in the long run, because that is largely the way the digital public infrastructure gets compensated. Because ultimately the infrastructure is created for the common good, and all common good is ultimately made sustainable by the participants who are using that to, consume services or get value out of it.
True. So last question, maybe I'll come back later. On the depreciation for this quarter, there seems to be a quarter-on-quarter rise also. So is there some explanation you can provide for that?
So that is basically, from time to time we do the physical verification of these assets, and there are certain assets which are basically out of their life, and on that we have booked this depreciation. This is only a one-off entry.
Sure, thanks.
Thank you. Next question is from the line of Rohan Mandodra from Equirus Securities. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. So coming to that, the ECL explanation that you gave, and also if I refer to the explanation in AQ, out of the total write-off that we take, around 20% was going to be the net impact on Protean. However, if I look at this quarter, almost 13.5 crores seems to be the net impact. So just want to check if there's some change in the assumptions here, and what is the incremental net impact that we expect from the 28 crores that will be written off over the next 2 years?
Yeah, so I'll just mention that when we are taking the reserve, we are doing it at a gross level, right? So that is just one clarification. And as I mentioned earlier, at a gross level, the impact over the next 2 years is going to be in the thereabouts of 28 CR. That again is the worst case scenario, provided we don't get any payments during the course of this period. And this again comes in because it is outstanding over a certain period of time, which we've taken as a call to say while it is sovereign debt and very much recoverable, we do realize that provisions should be made. On this gross is what we had indicated, that whatever we get paid, a part of it flows through to our vendor partners. So there is, anywhere between 50 to 80%, which goes out as a payable. So therefore, there is a payable concept which goes through. So in a worst case scenario, let's say there's no recovery, then 28 is a gross, but then the payables would get adjusted at that stage. But which we don't envisage, as I mentioned, because we expect this money to come through. And historically also we've seen that earlier on also we have got our payments as delayed as 7 to 10 years after the due date. So money always comes through. It is only a matter of process and procedure that needs to be followed for that to happen.
And just to mention that as we speak, over the last maybe 1 quarter or thereabout, I'm just referring to the most recent conversations directly with the government. The seniors in the department themselves are monitoring this, and they want to make sure that any overdues and any of this backlog gets cleared on priority.
So essentially the payables are not getting reduced in this provision that you're creating right now. It's only the receivables that you are adjusting. That would be the correct understanding.
Currently, yes.
That's right.
Okay. So second question was, if I look at the cash flow statement, there's an increase of around 47.6 crores in other financial assets year on year. So just want to understand what is that. So this is under the changes in working capital. So what is this increase referring to?
So these other financial assets, basically these are some of the investments that we have made. And these are routine items. This is not something that we expect to continue. So some of the intangibles.
Okay. So because under investments, you are not looking at it's under other financial assets. So just want to understand, is there some lien on these? Is it fixed deposit given on some business purposes? Some further, because that's a big amount, 47.6 crores.
No, we haven't given any of these liens, no.
Okay. So thirdly, of the total receivables that we have, what would be the amount attributable to business as usual receivables? And what is the remaining amount? How much provisions are we carrying against the remaining receivables?
Okay. So in total, if we see, I mean, the business as usual receivables are in the range of about 130 crores. Majority of that, 95% of that will be, I mean, about 92 to 95% of that will be within less than 6 months. And of the remaining, of course, there are certain provisions that have been made. The provisions, majority of, or maybe 99% of these provisions relate to the, these government dues with respect to the income tax storage and the receivables coming from the income tax department, nothing else. In terms of the overall provisions that we are expecting, as we've just mentioned that, apart from this remaining 28 crore exposure, there is nothing else, in the entire book.
Got it. And sir, coming to the newer businesses, sir, on ONDC, like the sir was explaining, on the SaaS-based revenue streams, because there are already certain network participants who are already present. So have we entered into some relationship with the network participants on setting up of a buyer or seller technology or something on the enabling of reconciliation services? And by when can we see the monetization or revenue streams to come in from that line item? And overall for FY25, what kind of a revenues do we expect from cloud ONDC businesses?
Okay, so in terms of engagements with network participants, yes, we are actively working and have enabled multiple buyer and seller apps. As you would have noted, we've also got into some key partnerships with large institutions where we are providing them ONDC technology, if you may, in a box for enabling their ecosystem partners, customers. These partnerships have been done with banks like Citi, HSBC, ICICI, Standard Chartered, where we are building not just buyer-seller tech in some cases for them, but we are also providing them provisions to enable their supply chain and their systems onto the ONDC ecosystem. We are likewise working with corporates and foundations. We today have enabled our distribution partners, like say a Spice Money or a Vangi with the buyer-supplier technology, because this could be B2B models or B2C models. And we are similarly working with some FPOs. So these revenues are already accruing, though naturally, since it's a SaaS-based model, as adoption grows and more transactions happen, we expect these streams to improve. But these numbers are already flowing into our numbers, so you would see them as part of the numbers already reported. We naturally expect promising growth on, ONDC and the various categories that ONDC is today enabling, because it's not just digital commerce. There is also open finance, there's transport and mobility, there is, similarly B2B ecosystem of supply chain management which is coming through. So we do see, promising growth which will be led by the network adoption. Would be difficult for me to give you a forward-looking number as a commitment at this stage, but we definitely see growth over here. And if we see the underlying network growth, ONDC, as you've seen, has grown significantly. We are almost talking about plus transactions now happening in a month, and there's almost a 20 to 30% monthly growth that ONDC is seeing from an orders perspective. So these numbers are critical to bear in mind to say what sort of possible SaaS revenues can come out of this business.
Sure. And on the cloud business, any updates in respect to the new client conversions on the government side, on the financial entity side?
There's a business where I definitely said while there's early momentum, today we are, having customers, so we have booked orders and we have what I would term not as annuity revenue, but contract revenue which is coming through. And we have key clients who are already, so we have around, more than double-digit clients at this stage who are availing our services. We are working in a number of sectors ranging from e-commerce to aggregators to SaaS vendors to manufacturing sector, public sector, where we are providing our cloud services. Similarly, equally important for us is that last year also went into getting a lot of critical certifications in place. So we are now a MATI certified cloud. We have PCI DSS certification, SOC 2, SOC 3 and ISO certifications, which also give us, a lot of ability to participate in more mandates as they come out.
Sure. Actually, last question I had. If I look at slide 7 of the presentation, and the proportion of online PAN issuance has improved sharply in the last couple of years. And as I understand, the contribution margins that we make in online is better than offline. But this is not getting reflected in our numbers. So just if you can help me understand, like, how should one look at this mix change in impacting the profitability?
Right. So basically, yes, the online PAN issuances are definitely increasing, and as part of the previous explanation or in fact the projections also that we had provided, the overall online opportunity is definitely growing, while the physical issuances are almost staying flattish. So the entire growth that we are observing over the last few quarters is actually coming from online PAN issuances.
And you would anyway see the aggregate in terms of the operating margin, but within the tax business, this definitely has a positive impact. As you rightly said, the margins are better as you do online because there is a sunk cost in the infrastructure, and what you are doing does not have the requirement of an assisted model over here. So the margins are better, but naturally there are various other things which go into the overall, operating margins which you are seeing at an aggregate level. But for this business, this is definitely creating the positive impact.
Sure, sir. Thanks.
And just also on your questions on this 45 crores. So basically, there was on the last date, there was money that was received from CRA, and also from the government. And also there was a FD maturity on that very day in the evening. So that is how, which is reinvested. So no other reason. This is a one-off, as I said.
Sure, sir. Thank you.
Thank you. Next question is from the line of Dhaval Parekh from IIFL. Please go ahead.
Thank you so much for the opportunity, sir. Hope I'm audible.
Yes.
Sir, in your opening remarks, you highlighted that the investments that you are going to make in your newer businesses can have some bearing on the margins going ahead. So can you quantify what is the amount that you have budgeted for expanding our newer businesses and the nature of such investments in FY25?
So, as you can see that, while our existing business verticals, which are the core pillars, as stated in the commentary as well as the press release. So the three businesses are actually, growing by, 19% year-on-year overall top line. But at the same time, you will appreciate that the similar result is not sort of coming at a profit level. So the core reason over there is essentially, the investments that we have made in the new business verticals in order to sort of make sure that, they have continuous flow of investments and the capital is going, in the technology. And basically that means that first you need to hire people, and these people then create technologies. These technologies are sold in the marketplace, and that is how the recoveries happen. So, these are over the last 18 months or thereabout, there are these significant investments that we have already made. We are hoping that, the expectation is that in the coming 4 quarters, these businesses should start yielding sort of revenues to take care of their investments that are going for the year. But I think eventually, to recover all the investments that we have made, we expect that it should be a 18 to 24 month trajectory for a full payback period.
Okay, so I think we made 10% EBITDA margins in FY24. So you expect that to continue or improve going ahead?
Well, I won't like to give a forward-looking guidance, but I would say that, I would like to split it into 2 parts. The EBITDA margin on our existing 3 businesses, which deliver more than 95% revenues, is maintained. And whatever you see in terms of the reduction, etc., that is largely coming out of the investments that we have made in the new businesses. So you can do back of the hand calculation. So we expect that, the investments obviously, will continue to some extent, but at the same time, the recoveries, or the revenue lines from the new business verticals, we expect these should grow from here.
Okay, that is very helpful. My second question is on the newer businesses, which we include the international account aggregator and all the other new businesses. So, for FY25, from which segment do you expect improving revenue visibility going ahead? And are there any new projects that we have won recently or are expected to, and we can start monetizing it within this year?
So as I mentioned to you that during the course of last year, we actually expanded our open digital ecosystem footprint. So beyond ONDC, we built the core agri stack in the space of agriculture. And that is something which the core agri stack is now going to power various use cases in the space of lending, advisory, agri-related insurance, crop insurance, so on and so forth. Again, related very clearly to leveraging digital public infrastructure, a consent-based data sharing enablement, and pilots are being established with multiple states across the country. So that is a line of business which we naturally see, that foray happening over there in the space of agriculture. The second area we expanded to it was in the space of education and skilling. And this is where, just like today, ONDC is connecting buyers and sellers. In this space, we were looking at, so there are 4 verticals or pillars to education and skilling transformation. One is in the space of education financing. Then there is learning, there is skilling, and there is jobs. So when we look at all these opportunities, that is again, we've created an open network around which we bring together the providers and the seekers in enabling these journeys. So that is another new line of business that is extending in terms of the open digital ecosystems. Equally important for us was the fact that we launched our complete open source API stack, where we are looking at enabling digital journeys. So this becomes a very closely aligned business to the IDE business that we already run. As I mentioned, we are one of the top 5 service and ASA and KSA, which is an authentication and KYC service agency to UIDAI and providing third-party identity services. We see these services becoming a value-added service stack, whether you are offering eKYC, you are offering eSign, you are building a stack on top of your foundational DPIs, and that is going to be very critical. And the entire RISE with Protean, which is our API stack and our AI-powered CKYC service, will enable various digital lending journeys and onboarding journeys. So these are the new lines, or I would say, under the space of data and in the space of ODEs, which we expect next year to add, further momentum to our new ODE space and data space. Other than that, our focus remains on, international and cloud, and international is again a business where we are engaged with multiple countries. As we mentioned earlier, this is about taking the India stack global. So we are focused in, areas in the space of identity, foundational identity projects, taxation projects, social security and welfare projects. We are today engaged with a host of countries in Africa, Southeast Asia, more than 12. And we are today actively participating in multiple opportunities and have submitted bids. So that is another line of business which should contribute in the course of the year as we go forward.
Okay. Thank you so much, sir, for the elaborate answer.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to strictly 2 questions per participant. Should you have a follow-up question, we request you to rejoin the question queue. Next question is from the line of Garvit Goyal from Invest Analysis Advisories LLP. Please go ahead.
Hello. Sir, my questions are all answered. Thanks for a very clear explanation.
Thank you.
Thank you. Next question is from the line of Dhruv Shah from Dalal & Broacha Stock Broking Private Limited. Please go ahead.
Thank you for the opportunity, sir. So my question is, so if I look at the data released by the government, so in terms of NPS and APY, the new subscriber base has not grown significantly. So if I look at APY, the growth rate in terms of new subscriber used to be average around 15%, and this year it's kind of flattish. And in terms of NPS also, it used to be 1.6 million new subscribers, and this year it's almost half, around 0.7 million. So can you explain what has led to this degrowth for FY24 and why we haven't been able to issue new subscribers, have more subscribers?
So just to mention, two facts. First, for Atal Pension Yojana, Protean has been, the 100% market share, and of the total accounts, new accounts opened under the Atal Pension Yojana. So this was around 1 crore accounts, now growing to 1.2 crore accounts. So there is definitely a close to a 20% growth over there. The second is in terms of the NPS accounts. So there also we have, seen almost a similar growth in terms of maybe around 15 lakh new subscribers who have come. And if we look at the overall end of period accounts, the overall accounts have grown to around 7.2 crore total accounts. So, we are, is there something else that you are referring to that we should mention?
So, sir, I'm referring to the new subscriber base. So, if I look at NPS in FY23, there were 1.6 million new subscribers. For FY24, it's just 0.7.
So, NPS was, if I look at the total, that is contributing to the revenue was 1.2 crore growing to 1.4 crores. And within that, the Atal Pension Yojana accounts, as I said, this has certainly grown from 1 crore to 1.2 crores.
Okay. Yeah. And my second question is, so in the last quarter, you had mentioned about 13 bids in the international market. So can you shed some light? What are the status over there?
So currently, most of these are still in the process of processing at the end of the the governments or the institutions which are managing the bids. So currently there has not been any further progress from last quarter.
Okay, sir. I have some more questions. I'll join back to you. Thank you.
Yeah.
Thank you. Next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah. Thank you for the opportunity, sir. And my question is regarding this gateway services. You talked about a stream of revenues. Can you elaborate more? But I couldn't understand it. We are making any money in transaction-based revenue right now on the ONDC platform?
Yeah. So the answer is yes. We are making money on the transaction-based services, which I mentioned was more in line of the B2B or the buyer and seller tech that we are powering today, where if you remember I spoke about some of the exclusive arrangements we have with banks, where we are offering them ONDC in a box. We are offering them, B2B or B2C applications for enabling their supply chains. Similarly, we are working with other partners like foundations or distribution partners where we've got biotechnology out there. So those are transactional models. Your question with regard to gateway was that gateway today, and I was giving an example, is something like you can look at UPI today, right? UPI today becomes the network around which, all banks are connected. And when you move money from, say, a bank A to a bank B, it goes through the UPI rails. So ONDC works similarly. So when you get onto a buyer application and you place an order, it is the gateway which is used to broadcast the order to the various sellers who can possibly give you that particular, good or service that is being sought. Likewise, all the buyers and sellers, or what we term as the network participants, are today registered onto registries so that they are available on the ONDC network. So the underlying gateway and registry tech is provided by us. Now this is at an ecosystem level, and today whatever tech we are providing out there, ONDC as an institution which is managing ONDC or the Open Network for Digital Commerce today pays us for that. And down the line, since this is a public good which has been created to enable, say, a digital commerce and open finance, the expectation clearly is that end of the day, the market participants will start paying for the services basis which they are able to enable their commerce or enable their financial services. So very much like today banks pay NPCI for utilization of the UPI network, we expect this model to at some stage become a market-facing model.
Okay, sir. So the SaaS model and all is on the other side of the ONDC. That's another way of doing it, is it?
So the SaaS model is on the B2B side, where we are offering buyer and seller technology or lender and borrower technology, or we are offering any of the extension services like reconciliation and settlement, or in terms of catalog as a service. So all those services are working on a SaaS model. The gateway works more on a actual infra, compensation at this stage.
Okay, sir. So my last question is, you talked about in your presentation about cyber security, education and agri and education model. So would agri and education would be sort of a government-based revenue, like coming from government, or it will be like from the transaction-based coming from the consumers and be more of a transactional in nature and market-based revenue system? And what do you do in the cyber security side? What kind of cyber security will be doing it? What kind of revenue will be coming there?
Sure. So let me address both of them separately. So when you look at agri and when you look at education and skilling, so see, both these businesses also have the equivalent of creating the digital public infrastructure. So DPI is like today we have ONDC. In the space of agri, what I termed was we built the core agri stack. So that is where we got the mandate from the government in that case. And under that, we built the ability to, one, create the architecture or the framework for a universal farmer ID, so that each farmer can be uniquely identified. And subsequent to that, when you provided the foundational identity, then whatever assets the farmer has, whether it is land records, whether it is crops that they have sown and data around that, so all that data is digitized, and the ability to share that data based on farmer consent to be able to consume various services like say a loan or insurance or advisory, that is what is enabled. So today we have built the digital good, which is the core agri stack. Various use cases will run on top of it. So I would again, equate it to the ONDC. So the digital goods, naturally, initially the government invests, the government creates the initial good, and then the network participants pay for it transactionally. So at this stage, naturally, the mandate came from the government. But down the line, when we are looking at enabling farmers, farmer organizations, food producing organizations, we expect that they will be the participants who will be paying on a SaaS model. So most of our contributions in the digital public infrastructure will always run on this two-tier sort of equation, where the digital goods will maybe be, covered in terms of cost reimbursement initially by the central agency, which could also be the government. Down the line, it becomes a network model. All work which is done on top of it in terms of consumer and corporate tech, where the application layer comes in, will always be a SaaS model chargeable to the people who are consuming this digital good. So same will happen in education and skilling also. Does that address your question?
Yes. If I'm allowed to ask one more regarding this exports, when we export this kind of tech, say, to any other country, what will be the revenue model there?
So I see in most of the countries, since these interventions are at a digital public infrastructure level, so most of these engagements are today working through the government or through multilateral entities. So they are coming in the form of RFPs. And RFPs generally have a have a portion which is more connected to deployment of technology, which is building the core technology